What is up? Glad you could be joining me here today with what I believe to be the #1 options trading signals chat. If you're not in the chat already, feel free to take a second, scroll down to the description, click that pre-registration link to get registered, and I hope to see it in there soon. If you're already in the chat, welcome back. Hope this is another helpful video. My name is Colin Ringus with Stock Hours, and today I'm going to be covering what I think is one of the most important skill sets to learn and master to become a successful trader, and that is technical analysis. So let me get logged into Thinkorswim and we'll hop right into it. All right, so here we are in Thinkorswim. I've got Tesla pulled up on a 4-hour, 360-day chart, and as you can see, we've got a blank chart. Not gonna lie, that hurt a little bit, but for the sake of the video, I figured, removing any support resistance lines, trend lines, indicators, anything like that that I had up and just starting from a clean slate would be beneficial. So next, I'm going to talk about what technical analysis is for those that maybe don't have a clear understanding of what technical analysis is. And one of the best ways that I've heard it been said is that technical analysis is the study of historic price movement in order to make accurate decisions on what the market may do next. Technical analysis is how we make those accurate decisions of what the price of something in the market may do next. A key thing to note is every part of technical analysis is based around historical price movements. Think about a candlestick chart like the one for Tesla that I have here in front of us. That is just a visual representation of price movement, and each candle represents the specified time frame that we're on. So if I was on a daily chart, each candle would represent the movement of the stock, the movement in price of the stock over a one-day period. Looking at this is a 4-hour, so likewise, each candle is going to represent a 4-hour time frame, so on and so forth, down to 1 hour, 30-minute, 15-minute, 5-minute, even down to 1 minute. Why is all of this important, and how does it apply to technical analysis? Well, different time frames, as well as the candles that represent the price movement during that time frame, that is the fundamental building blocks that you perform technical analysis off of. So where somebody might look at a daily chart or a 4-hour or a 1-hour chart to identify large time frame, price movements, support resistance levels, uptrends, downtrends, different patterns. The same can be said about a 5-minute, 15-minute, potentially even 1 minute, although I tend to stick with 5 and 15-minute for identifying more of intraday trends. What is a trend? Why is it important for my trading? And how do I identify it? An uptrend is simply when a stock is putting in higher highs and higher lows. A downtrend being the exact opposite. A stock is putting in lower highs and lower lows. Why is this important? You never want to be fighting the market. The saying, the trend is your friend, really is true, and that can be supported mathematically, because if you are, let's just say, following an uptrend and your highs are always higher and your lows are always higher, then the moves to the upside are going to be greater than your pullbacks if your pullbacks are always higher than the previous low. So looking at Tesla here, let's just visually, go through some of the things that we see on this chart. To the naked eye, you can even see that Tesla's in an uptrend, right? So if we have this trend here, let's leave it at that. This is, pandemic low. You get the impulsive move to the upside and you get the pullback here. This low is higher than this low, right? And then we have the impulsive move to the upside, consolidation sideways, pull back, right, to this trend line. And then when we break highs, impulsive move to the upside, pull back, impulsive move to the upside, pull back. And if we zoom in here, actually, we will see that this low here, 136.61, is higher than this pullback, 134.76, so higher by $2, right? So impulsive move to the upside, pullback, consolidation sideways, impulsive move to the upside, pullback. So each time we're getting these movements to the upside, pullback to trend line, consolidation sideways, consolidation to trend line, before getting the impulsive move to the upside, pullback, impulsive move up, right? So very, very, very obviously in an uptrend here. Now, some of the things that I was pointing out along the way was the consolidation, right? So there are periods of time where you will get consolidation here, and some of the patterns that I will be talking about and here is a great support because Tesla came down, bounced off it down. So this right here, this pattern that we're looking at would be considered a descending wedge. And I will throw a picture on the screen here. Wedges, symmetrical wedges, ascending, descending triangles, all that kind of stuff can break either way. So there are preferred directions that they break, but for me personally, I trade breakouts any way that they come from a wedge. So this descending pattern here, if the market got weak again and it was supported at this level several times, then this would have been more of a breakout trade to the downside. Same with the movement here to the upside, right? We broke out of this descending triangle. We came back up. This was definitely resistance level. Here you can see it getting rejected there, but then continuation, and we fall back into an uptrend, right? So we have the impulsive move up, consolidation, bit of a flag here, or pennant, and then breakout to the upside, impulsive move up, pull back, impulsive move up, and then this is where we fall out of that uptrend. Here's a descending triangle. We can see right here that we had a bit of resistance at this point, and so this pattern being the inverse of what we see here, and I'll get rid of this trend line. So we kind of have this was the descending triangle. This is an example of we were resisted here, we were resisted here again, we were resisted before finally breaking out. This is more of an ascending triangle pattern, and then we go into this whole uptrend here where impulsive move up, pull back, impulsive move up, pull back, impulsive move up, pull back. Each time these lows are getting higher and higher and higher, all the way up until here we have a very nice symmetrical wedge, I would say, that broke to the upside into all-time highs, and then this pullback. So if we take this low, this pullback here is where that uptrend broke for sure. And then if you notice, when it bounced, came back up, we have a lower high. Before putting in new lows, bounced into resistance, came all the way down, so on and so forth. So Tesla falls into a downtrend here. So we were just talking about spotting trends on a large time frame. That's where you're going to get more significant, bigger moves and things like that. Same can apply during the day though. So if we look at AMD here, they had earnings yesterday. So we had a bit of sell-off from earnings, but then from this point, so we were in a downtrend, right? Down, it bounced up, didn't put in a new high, fell down, whatever, hit lows. And then it starts this whole uptrend, right? So bounce, pull back, bounce, pull back, bounce, pull back. Impulsive move. A little bit of a consolidation here, a little bit of a symmetrical wedge, broke out, impulsive move up. Clear on the 1 minute right here, bull flag going on. Didn't get that quite right, but you have the Flagstaff flag, broke out to test resistance again before continuation. All the way up, pull back. So very easy, to spot the uptrend here for sure. A little bit later on, and here I'll show you on a 5 minute now as well. We have this whole, uptrend through the end of the day, basically. Can take this line, put it across the top, pretty much matches up as well. So this is more of like channel trading. So we're in an upward channel, and so places to buy once this is established, right? You could buy the bounce here. You could buy. It didn't come all the way down. Whoop! It didn't come all the way down here, but other places to buy. And then where are you going to be selling? You may be selling, into resistance here. Let's talk about Amazon yesterday because there were actually multiple trade opportunities here for support resistance, like breakout traders as well as trend traders. So in the morning on Amazon, clear downtrend, right? So we're coming down, down, down. Here we had established support, right? Down here we had also established support. So the way that two different traders would play this is we're in a downtrend. Each high is getting lower, and we have support here. So as Amazon breaks below this support, you can get a nice scalp, day trade. Same here, we established support, we bounced, and in the chat we talk about an H pattern, and so here you can actually see like a lowercase h. Think about it like that. Like here's the whatever body of the H, and then up and over into momentum down through that support. So breaking this low of day, got a lot of momentum down through there. We see volume down here at the bottom increased on those from its prior, lower amounts of volume. Now, as a trend trader, we're in a downtrend, right? So lower highs, lower lows. We can clearly see that as we come down, and so we keep retesting this trend. And so here we actually test this trend. So as a trend trader, and I'll throw a picture up of an example that I saw online. Here we go. Whoa. Let's zoom back in. All right. So you have the breakthrough of support. You have the retest of support because previous support becomes resistance. So you retest that level now as resistance, and a rejection not only off of that resistance level, prior support level, but you also have a rejection off of that trend line into continuation down, and we put in a lower low. Another area of technical analysis that I find extremely important to know, on top of identifying trends, identifying patterns, would also be charting support and resistance levels, identifying supply and demand zones, that kind of thing. So I'm going to go through just real basic, charting support and resistance levels. We're here back on Tesla, 4-hour, 360-day, so a large time frame, and we're just gonna take a look at things. So real quick, like I've mentioned, we have this uptrend here, really good to note and just throw on here. And if we look at Tesla, it's actually been holding that all the way through. So yes, we're in a lot of consolidation here, but we actually have a pretty good uptrend going on there. Oops, attached to the wrong candle. All right, so we could have some kind of wedge, kind of like that, forming on Tesla. But now let's take a look at support and resistance levels. So right off the bat, eyeballs should catch on to this level here. It was resistance back here. We broke through, broke new highs. Previous resistance became support. We also got supported there. We also got supported there. Right above it, it seems like things are holding up really well. Oh man. Okay, there we go. Somewhere right about there, Tesla's getting supported very well. Coming into more recent times, we can see that Tesla's been supported well at that area, and it's gotten rejected up here. So 700 level, key level, makes sense. 620-ish level also makes sense. And just looking at that, we can see in general here 625 probably resistance. Yeah, 625 area, and I'll zoom in so that you all can see this a little bit better. Just going back, there we go. All right, so we can see on the 4-hour, only candle wicks have really, Tesla's only wicked down below 625, and in general, this is where you would see a lot of demand. So a demand zone in this range on a large time frame on the 4-hour, because the candle bodies themselves, they're not closing below that range. So 625, 620 range seems to be a good support. If we break below this downtrend and break those levels, we could see a move to the downside, and that would look something like we're coming down to test 600, so on and so forth. And then to the upside here, we marked 700 as a resistance level, and all the way across you can see in so many instances where Tesla was either supported or rejected around that area as well. Now within this range, we obviously have different levels as well, right? Like looking at that 6 65 as being somewhat of a resistance. You can see it was resisted here, got rejected before bouncing up through that, fell through, resisted again here, resisted again, so on and so forth. Another support, being right here at this right here at the 640-ish level, 639. Support and resistance levels are levels that, based on previous price action, historic price movements and stuff, we have seen that stock get supported or rejected, meaning, sellers come in or buyers come in and keep the price of the stock above that level. Breakout traders, traders that play pattern breakouts and support and resistance levels, those are levels that they are going to be looking at for, if Tesla breaks this 665 to the upside, playing something long, or if it breaks a key support level, going short, that kind of thing. Now for people just getting into charting and things like that, an indicator that might actually help, let me pull this up, is the volume profile indicator, and we'll put that on. I'm actually going to edit this. You can change settings on this, so I'm going to edit it to show tick size, and I am going to change this so that it's not quite so big, to 200 or something. So now this will show tick size, and again you can look at this and visually see where kind of support and resistance levels we're at. So we might see something there, we might see something here, and if we go back and we look at those levels that we just put on, whoops, lost them, we'll see that sure enough that one level was resistance here, we had support here, and we had support here. So that was basically just off of that volume profile, me looking at it and almost getting these support and resistance levels spot on. So we have a lot of trading happening kind of in these areas, right? So a lot of consolidation is going on here, and then when we enter these lower volume areas, that's because things move very quickly, and so we notice there's only a little bit of trading here, got rejected hard, we fell into consolidation, so there was a lot of trading happening within these ranges, especially within this area. And then once we broke out, I mean, it was a quick move up from 455 to 540, and so just in general, where we see like, I could almost guarantee that I can get this support and resistance just based on this, right? So, and that is basically that wedge that I talked about earlier on in the video. Whoops, didn't grab the bottom there. Right there. So we've got the wedge here, and we have consolidation. You have higher volume. So I would imagine that once we break out of this 700 level, we're going to get a decent pop to the upside. Same with if we manage to fall, if we ever manage to fall below 540. So now if we take this same thing and we apply it on a lower time frame, and I have too many ticks here, so let me just edit this real quick. Alright, so I cleared the chart again on Tesla, and we're here on the 1 hour 20-day. So looking at this, I mean, we've got good support and resistance right around this level here. We've got good resistance to the upside here. Let's see what else we have. Support resistance level, yeah, right around here. And we have another one, definitely down here. Yeah. So now let's go ahead, click that, and another right here. So now let's go ahead and look at the volume profile to see, how that lines up. So let's make this a little bit smaller, pull that in. I mean, we will see that sure enough, a lot of trading, in this range. So a breakout of this range, we tend to get these big movements down to those next levels, big movement, and same with to the upside. We saw a big movement here, we saw a big movement here, and that those tend to fall in these lower volume areas. So pretty interesting stuff. I like this indicator. I like to definitely like to use it to my advantage. And yeah, take a look at it, see what you think. Another piece of technical analysis is the use of indicators. There are so many indicators out there, so many strategies that people had developed around them. I'm not going to go super in depth in any. I'll show some here real quick, just kind of how to get them in TOS and potentially configure them, change the configuration a little bit. But I mean, there are so many different strategies out there. Feel free to go do your own research, see what works. For the most part, the style of trading that I do is based around breakouts, so breaking out of support resistance levels, maybe bouncing off a trend, breaking out of bull flags, bear flags, symmetrical wedges, ascending, descending triangles, things like that. Those have been the patterns that I've found to be the highest probability for my style of trading. But again, there's tons of stuff out there, so feel free to research some of those after this video. But for now, I will show you some different indicators that I think are good to pair, and I even pair them along with some of the trades that I make, just to get a bigger picture of what's going on, where the stock is at in things and whatnot. Just constantly looking at anything that can give me a bit more of an edge or confidence in the trade. The more indicators that I see lining up to support the trade idea that I have, or the plan that I have for the trade, then the higher probability oftentimes those trades end up being. So yeah, let me just dive into a bunch of different indicators that you can do more research behind, or potentially can make a future video on. So first one here, I've thrown some exponential moving averages, moving average exponential, whatever you want to call it, onto my chart here. So to get this on your chart, and there's so many different strategies around moving averages, and these might be one of the most commonly used. So feel free to look into different things. But basically, in studies here, in any trading platform that you're on, pretty much should, if it's any decent of a trading platform, they should have this. So you're just going to type in MOV for moving, AVG for average, and then you'll see it right here, moving average exponential. So you can add that. It's going to default to a length of 9. So common ones, I mean 9 is somewhat common. Other common ones that I've seen are like 14 or 15 exponential moving average with 21 moving average. You also see like 20-50 strategy, or to use it with like Fibonacci numbers, you would alter that to 21 and 55, which actually is what I have right here, 21, 55. Other lengths that are common are like, I don't know, the 100 and 200 day moving averages. So lots of strategies, to play off of those when they cross, when, if we're in an uptrend and the stock, comes and breaks below. There's tons of different stuff. Just go do some research, look into those. So next up, I'm going to show, let's see, there is, very common RSI. So that's going to be, where'd that go? There we go. So that's going to be a common one. What else do you have? You have MACD. This is another one that a lot of people use. So we've got MACD, you've got stochastic, stochastic full. So all different ones to look into. I'm going to take those off now real quick. All right, what else? Something that I really like to use are standard deviation channels. So I'm just going to put that on there. And you can get to these, go into studies and standard deviation channel. So when you add these, it's going to default to the deviations will be 2. So I like to add several. So I set up one so that I have a half deviation. And you can change the color of the lines. So always have your middle line on all of them to be the same color, so that that line stays the same color. But then for different things like half standard deviations, I'll usually put like a really lightly dashed line, and whatever for standard deviation, second standard deviation, and so on and so forth, will be like either a solid line or a long dash. So you can edit all that kind of stuff, but for now I have half standard deviation and 1 standard deviation in just this set. You can, anytime you get a bunch of indicators that you like, you can save it as a set so that you always have it. But anyway, so I use standard deviation levels just to see relative, like if I go on, 4-hour 180, which it looks like we're actually on, but here, let's throw this on 360. There we go. Shows relative, like over the 360 days, where we're trading at. Are we overbought, oversold, that kind of thing. So time frames that I actually like to use a lot would be like the 1 hour, 20-day. That one's pretty interesting. You'll find that a lot of times it's bouncing off of key standard deviation levels. Areas that we get overbought, oversold. And here I should have zoomed in a little bit. Okay, that's weird. That's not working for me, but we can do it that way. So anyway, standard deviation levels are one that I'll use. I know that Bollinger Bands, this is something that people use a fair amount of. I've traded with Bollinger Bands in the past. You gotta, in my opinion, you gotta tweak them. But yeah, figure out your own strategy around that or look one up. There are so many strategies out there using different indicators and things like that. So most important parts of technical analysis, I would say, are learning the basics of charting. Not only chart patterns, what do they mean, all that kind of stuff. You can even look into what different candles mean. So like you may have like engulfing candles or 38.2 candles, shooting star candles, hammerhead candles, like all that kind of stuff. Different candles can mean different things. I personally don't trade off of candles. I haven't done a ton of research into strategies around those, but I will say that learning, the basics of charting, support and resistance levels, patterns, learning patterns, and all that kind of stuff are very, very key. And then, come to these indicators and learn, how some of these indicators can support, some of your trade ideas. There have definitely been trades that I have stayed away from that in some cases have looked like decent trades, but then, when pairing them with some of the different indicators that I use, it's caused me to avoid the trade, and it has actually saved my butt sometimes. So I know it was getting to be somewhat of a lengthy video, but it is such a crucial topic to being a successful trader, and there's so much more that you can learn out there. So if you did learn something, please do us a favor, leave a like, drop a comment, what you learned today. If there's indicators or other topics that you want us to dive more in depth on, feel free to drop a comment on that as well. Gives us ideas of, future videos to make. But yeah, that is all from me on the topic of technical analysis today. Best of luck in the markets. I hope that something, you learned today in this video, you're able to take and apply to some of your trading in the coming weeks. And I hope you're able to join me in the next one. Peace.